Well, welcome everybody to the Qredible Live broadcast. We're excited for a great episode today. We have lots going on. We are excited to welcome a good friend of Qredible, Jeff Wise from Newbold Advisors. So Jeff has been at the forefront of financial services and risk management for many decades. He's a highly respected senior leader in the financial industry with deep expertise across credit, operational, fraud, compliance, and enterprise risk. Jeff has held leadership positions at some of the country's largest financial institutions and has built a reputation for designing and executing comprehensive risk frameworks that truly move the needle. He's also led some of the biggest mortgage services projects in the industry, managing teams of over 100 consultants and driving outcomes in originations, capital markets, and servicing. So currently, Jeff serves as the managing director at Newbold Advisors, where he brings his sharp strategic mindset and operational excellence to clients navigating complex regulatory and risk challenges. And okay, so I need to fact check this last one. Beyond his impressive professional background, he's a former D1 tennis player.
Yes, I was a former D1 tennis player, currently retired because of all my numerous injuries. Now, granted, the D1 program I went to wasn't a top program. It was the only way I could play. So
nevertheless, the categorization
sports have really evolved since then. So, but yes, that was a great time. It was a small school in Virginia called Radford University. Proud to represent them, and just one of the best times of my life.
Awesome. Well, we are so excited, not just for your incredible, sportsman history, but also for bringing your acumen in risk management today. So welcome to the Qredible broadcast. We're excited to have you.
Thank you, Jordan. Thank you, Brian.
And I didn't even know that about you, about your tennis skills. So I will.
Well, there you go.
I will not accept your challenge on the court. So that's good to know now.
Yes. Well, really, let's be clear. Former skills. Like today, we're going to be talking about current state and future state. My skills were very much past state. So.
Oh well, there you go. Well, that's good. And you and I actually met in the mortgage industry. And, in fact, our firms actually worked together back then, which is why I have such high regard for Newbold Advisors and the great work they did in that industry. And now we're working again in this industry. But, the reason I always kind of tell that story is because I just think there's so many parallels, to the evolution of sort of regulation in the industry. And I always talk about the regulatory pendulum, right? So, the cannabis industry is indeed sort of experiencing a similar trajectory to the mortgage industry where, in the beginning there was like minimal or loose regulation, and then it was followed by a period of a little tighter but still loose oversight. And then as issues arise, right, like mainly the 2008 crisis, then the pendulum just went whipping back the other way, and we're starting to see those inflection points in this industry, where we're seeing the headlines coming up, which is now causing a lot more regulatory oversight in both the hemp and CBD side at a state level, even though hemp and CBD is federally, legal. But now we're just seeing this tightening, as new states are coming online, and we're seeing the industry maturation. But the one thing they both have in common is sort of the compliance and technology convergence, right? And the need for this shift from this reactive, what I used to call in the industry firefighting mode, to more of this fire prevention mode. I really want to talk about how businesses are currently, sort of handling compliance and where we see some of those gaps that are out there today.
Mm-hmm. Well, I think you make a really good point about the firefighting. And when I think of your analogy you used, I think about proactive versus reactive. And I think the leveraging compliance technology, or really technology in any aspect of the business, but particularly in compliance, gives you the ability to manage your compliance risk on a proactive measure. You've got real-time monitoring, you've got the data accuracy, just the automated piece, as opposed to, and again, to your point, it's not dissimilar to what we saw in the mortgage industry, particularly around 07, 08, the time of the crash, where there are a lot of manual processes, a lot of manual testing being done. And it's simply, you don't have the breadth in that approach to actually really identify your key compliance issues. And then you think about something like the cannabis industry, where you don't have one set of federal regulations, you have multiple sets. You have a compliance maze, if you will, of all these different requirements. So leveraging technology to help manage that risk is even more important and really more vital for these companies.
Yeah, and I think it's really important. That's another parallel to the mortgage industry. Is mortgage had its federal oversight, and it also had its state oversight, and also had its local municipalities. I mean, same thing with cannabis. So what it's done is create this really complex, weaving of regulations, which makes it hard to keep track of, especially if you're a multi-state operator. But then put it in practice, and that's really one of the things that I would kind of expose here. And I think it's really important that we do expose this, is that, technology is not really an investment that's been really made. So I sort of have this theory, and I think this theory is sort of proving true, that a lot of companies are not making the investments in technology. So what are your thoughts about that, and how they're looking at technology in this industry?
Well, I think you're right. And I think a lot of it just, may be born out of not really understanding the true value that technology can bring. Obviously, there's some financial limitations, right? That's a spend in doing whenever you bring new technology in, but really not having a good understanding of what that cost benefit will be. Again, when I think about technology on the compliance side, and this is not only on the cannabis side, but it's also in mortgage, it's in banking, it's financial services. The two benefits you get are really increased coverage, in terms of the automation, what you can leverage automation for. Instead of doing a 10% sample, you can track all of your transactions, but you can also do it at a reduced cost. And I'm not just talking about the potential cost of fines and, based on regulatory findings. I'm talking about the cost of actually doing the work, not having someone go in and manually check and manually test. Having someone do more of an issue validation. Again, something that we saw in the mortgage industry after the crisis. When you talked about issue management, no one knew what you were talking about, right? What was the issues management? Then it became a big deal. Okay, we got to manage the issues, we got to identify the root cause, and then we've got to put a remediation plan in place. That's all part of a very effective compliance management system, and leveraging technology allows you to free up resources in order to do that. So that's what we're seeing throughout the industries that we cover, a move toward really just getting away from the manual testing, relying on technology, relying on automation, and taking your finite resources that, let's face it, the cannabis industry has, right? There is still a financial strain out there because of the rescheduling issue, et cetera, 280E, but putting those toward managing the issues so they don't pop up again.
And I've seen a lot of evidence of this. So we've done some studies and have called up some studies on this. So, despite that, there's available solutions. And by the way, Qredible offers one of these of enterprise management of certificate of analysis. Only 30% of companies are using, I should say only, so 30% of companies are using manual methods for managing all of the lab reports that come through. What I mean by that is they're using like Google Docs and like Google Sheets and that's that type of thing. And then when you look at sort of inventory management, only there's a lot of companies are relying on their seed sale track and trace systems to do inventory management, for example. And then when you just look at analytics and that kind of thing, despite there's some good tools out there, there's not a lot of companies that are using this. They seem to be focusing their technology on like cultivation and extraction. And when you look at like R&D, a lot of that is being spent on like strain development, and new strains of cannabis and that sort of thing, but it has nothing to really do with the actual enterprise tools. So 60% of cannabis businesses lack integrated ERP systems, right? And that, I mean, to me, that's like a huge trend. Now we're starting to see that shift a little bit, and from what I've been reading and what I've been seeing and talking to other brands, the reason we're seeing it shift is because we're seeing an increase in the compliance. We're seeing an increase in the fines, fees, and penalties, and lawsuits and those types of issues. So where, and that sort of leads to where do we start? How do we help one of these companies that they may not have the budget, to your point, right? But one of the things you guys offer is sort of a fractional CTO type situation,
do.
and also sort of an affordable assessment. So can we talk about how we can help these guys understand where the gaps are in their processes, which would not only are they inefficient and losing money, but they're also putting themselves at risk, right?
Yeah, of course. Yeah. So you mentioned the assessment, and that's really kind of the first phase of really any sort of project to determine where you need improvement in your processes. It may be related to an implementation of new technology. It may be related to an enhancement of technology. It may not have anything to do with technology. It just really depends. But when we go in, anytime we do any sort of technology implementation or optimization, we always start an assessment to understand where you are. Where are your gaps? And I think there's a misconception out in this industry as well as other industries that if you have process gaps, if you have compliance gaps, control gaps, whatever, if things aren't working well, that if you go on and invest in technology, then that's going to solve your problems, and it won't. And what will is identifying your key gaps, putting in a appropriate roadmap remediation plan in place, then determining, okay, in order to remediate these issues, is it a technology issue? Is it a people issue? It just really depends, right? But to your point, I'm a firm believer, and we've seen this in the mortgage industry and the financial services industry, where technology has improved so much over the last, say, 10 years. And I think your products, Brian, are a great example of that. And what you can get in terms of the greater coverage and reducing your inherent compliance risk is so significant compared to where it used to be a few years ago. So when we do our assessments, whether it's a technology or assessment or more so a process assessment, when we do our process assessment, oftentimes our remediation recommendations will involve some level of technology. So.
Yeah, and I think that's interesting, and for our audience to know that we work with Newbold because Qredible doesn't really do those assessments, right?
Mm-hmm.
We've done them before, but it really ties up a lot of our software resources. So we don't do that anymore. I mean, we do rely on Newbold to help. So because we get a lot of questions, how can you help us understand what our issues are? I said, well, we can solve a lot of technology issues, but we're not just going to jam technology in for the sake of jamming technology. And we need to know where that technology best fits, number one. And number two,
correct.
How does it solve a problem? Because if we're just, sort of selling you on technology and there's no understanding of what that value is, then, what do we track? Like, how do we track success? So that's one of the values of working with Newbold is you can go in there and identify those gaps. And listen, our technology may or may not be a solution, right? You're looking at this objectively, and where it is, it might be us, it might be another technology that they could utilize, but at least somebody's looking at it. And I when I looked at some of the impacts and issues are, legacy workflows. There's a lot of them in this industry, and yet those workflows have to change all the time because the regulations are changing. So 70% of like retail organizations are still using paper checklists, which is crazy. And then, when you look at sort of the back end and GMP standards that are now being required in some areas, only 12% of staff in the industry is really trained on that GMP overall on an enterprise level. And, let's just take like packaging and labeling. I mean, there's 83 different variations in packaging laws across these US states. So when you look at all of this complexity that goes on, I mean, like, why wouldn't you use technology? And, I know like people get scared because of the expense, but having an assessment done to determine what impact it could make and what the ROI is, I think is huge.
I agree 100%, Brian. And also, having that assessment also gives you a kind of a recalibration, if you will, of where you are current state. Because I think to your point, a lot of people, one, it's the technology. They, a lot of companies, and this is not just specific to cannabis, this is also financial services, mortgage, et cetera. Until they really look into these technology solutions, they don't really have a good understanding of the value they can provide. Mm-hmm. But, really the second piece of that is that they may not understand how much inherent compliance risk they have. So when I talk about the inherent risk, right, the inherent risk is, as you guys know, when you go into a business, when you operate a business, every day you have a certain amount of risks that are not, they're out there. And what are you doing to control those? And if you don't have a good platform in place, if you don't have a good compliance management process in place, you really have no idea what your risk profile is. And that's one thing that an initial assessment, I should say, will do. It'll kind of give you a kind of a snapshot of, okay, where we are, how exposed are we, which really ties into what these companies need to do in order to improve their compliance profile. So,
yeah.
We had a question come in that I think is interesting a little bit, just based on where we're at in the conversation so far. So we've talked a little bit about opportunity identification, finding the right technology, detangling complexity. Keith Bolden asked, how do you view fairness in artificial intelligence? So AI, I mean, if somebody's going to talk about bringing in technology to lower cost, right, which at Qredible, lowering the cost of compliance is like our mantra. He's asking about AI. I think it's interesting. I'm interested to hear y'all's perspective. How do you view fairness in artificial intelligence and its impact on risk management in the future? So do you see AI, financial services, and cannabis companies preparing for that? Are risk management teams in each of these industries watching fairness in AI as a part of their evaluation? So as we're thinking about AI and then fairness in AI, what are kind of y'all's perspectives on that in terms of risk management?
Well, I know what my perspective is. And so I will tell you, I think AI is an amazing tool, but, it's like I tell my kids, it's garbage in, garbage out. So you got to be really careful about, what you take in. All right. Because what comes out is a lot based on what you take in. So as it relates to regulatory changes and regulatory information, it's really important that the quality of the input into those models, into those large language models, that you're not just taking out of Wikipedia and these other places, but you're training these proprietary. Now, when I say proprietary, it may be an implementation of ChatGPT or Perplexity or one of these engines, but you have your own model, okay, that you're training. And that's the critical nature. What's behind those models is the subject matter expertise of the actual experts. So my opinion is artificial intelligence is great as long as you understand what the inputs are. If the inputs are bad, the outputs are not going to be any better.
And I will chime in here, as I agree with you, Brian, 100%. But in addition to that, one of the benefits, which is also a risk of AI, is how easy it is to build and implement. I mean, really, it's not, these aren't systems, or this isn't this isn't technology that takes money. You can do it in hours if you know what you're doing, right? So my question is, from a risk perspective, do these companies that are using this to operate their business on a day-to-day basis, do they have appropriate controls and governance in place? I can probably tell you most of them don't. I mean, it's a new technology. It's a nascent technology. So is the governance around it. I was at a mortgage conference, an AI mortgage conference last summer, and they were talking about AI. And of course, 90% of it was really the effectiveness of AI on the day-to-day operations, right? But I remember, one of the gentlemen came up from one of the companies speaking, and basically he talked about, hey, he woke up one day and realized, wow, okay, we have all this great AI, but we don't really have any governance around it. So we created a policy. And of course, being a risk and compliance person, I kind of giggled a little bit. Okay, it's great you have a policy, but as you know, Brian and Joy, you need so much more from a compliance and risk management perspective to ensure that you have appropriate governance. So while AI is incredible in what it can produce, I think it's also noteworthy the risk it can bring on almost immediately once you implement it. So
yeah,
unless you have an appropriate governance in place. So,
and I've been watching AI be used in like dispensary models for coming up with terpene analysis and product analysis and all that stuff. And it's really slick with the output. But my question is, what's the input? Like, unless it's science-based, right, where you have good scientific empirical data about those products behind it, then you don't know what you're getting, out on the output. And that's just one example of, where I see AI being misused, like at a dispensary level, to aid a bud tender, because you don't know what science is feeding it. And so unless there's a good science, biochemist scientific model behind it, you don't know what you're getting. So I think that was a great question, and
Well,
it's
very
something
good.
we have to be aware of. There's a misnomer out there. It's a widespread misconception in the cannabis industry that seed to sale software solves all problems related to compliant operations. And I mentioned that a little bit earlier, and I wanted to really focus on that because while seed to sale systems, do play a critical role, obviously, in regulatory compliance at one level, they're also very good revenue trackers, right?
Yeah,
Because
sure.
so because the states need to know where this revenue is coming from,
Of course.
and what they can charge, which is why they implement it. But to me, it's not enterprise quality, it's not enterprise safety, it's not enterprise tracking. And I think that's one of the areas that I know, Jeff, you and I have talked about where we've seen a lot of brands that are using, these seed to sale tracking systems as their inventory management.
Yeah.
Which does not make sense. First of all, because not all states use metric, for example. So you have a multi-state operator that's using multiple seed to sale, and it doesn't provide that enterprise view and control to all your points of sale. So that's one of the areas I know that that you guys look at, and that's critical. So I just wanted to sort of bring that up. Do you have any comments about that?
Yeah, and I think it's that's a good point on the seed to sale, and I know we've talked about that before, but also I think that's kind of a potential issue with all sorts of technology. Is, do the companies really understand what this technology can do, and more importantly, what it can't do? Right. I mean, we've been talking a lot just right now about what technology can do. Right. We've been focused on that for the last 20 minutes or so. But technology, again, it's not going to be able to solve your problems. If you have ineffective processes in place, any sort of technology will give you potentially a symptom, right? Okay, this is a symptom of a problem, but do you really have the discipline in place to really understand the problem to be able to fix it? Because as you know, Brian, again, harkening back to the mortgage crisis days, when all of a sudden operational risk management, issues management, things that were ignored largely in the industry forever became front and center, right? And one piece of that is root cause analysis. Okay, if we have an issue come up, can we really define what's driving this issue? Understand the difference between a symptom and a root cause. So, and again, I'm kind of going on and on, probably beyond that, but again, back to your original question. Yeah, I think just understanding the limitations of technology, honestly, in terms of what problems it can and can't solve for you, I think is a big understanding.
Or its intended purpose. And I think that you made a great point about that is, so there's a lot of misuse of technology to try to solve issues that they're not intended to solve, and may not give you that full enterprise integration that's needed and that enterprise view, nor will it actually solve the underlying issue on an enterprise level that you need. So correct. I think that's a big danger, and I've seen a lot of misused technologies in this industry. And all that's doing is creating bottlenecks for you, and could be creating bad output, right? For your business as well. The other thing I wanted to sort of shift gears on a little bit, because it came up this week, and it was a big issue in the industry, is every retail dispensary, that I'm aware of, or at least that I've shopped at, utilizes this PIN debit or system where they're using sort of the your debit card, or they're using and have used in the past cashless ATMs.
Yeah.
Well, big lawsuit hit this week because back in 2023, Visa and MasterCard was saying, look, you can't do this. You cannot. This is not kosher, right? Yeah. And they put a cease and desist out and a warning out to the payments community. So, but for the first time, what we saw, I mean, I think it's the first time, but what we saw Visa go after the sponsoring bank. In this case, it was Pueblo Bank. And then Pueblo Bank went after the payment processor, okay? And then the payment processor, because by the way, just like the reps and warrants model in mortgage, it all flows downhill, right? Visa goes to the bank, the bank goes down to the processor, and now the processor is suing Trulieve because they're saying to Trulieve, you're the ones who did that. But, to me, it's a lot of bunk, because I think, what processor you're supposed to know through KYC, KYB,
Yeah.
what is going on down on the end. But the reason I bring this up is because this is another area where I think we need to be looking at the whole payment infrastructure,
Mm-hmm.
and what solutions can be put in place to avoid your dispensary being shut down or your company being sued. And there's ACH transactions. We're seeing a big growth. WorldPay just came out with their 2025 survey, and we're seeing a huge growth in point of sort of this digital wallet, right?
Yeah,
So
sure.
like I used to be, if I left the house without my wallet, I would panic. And
Yeah.
now not so much, because I got everything I need right here on the phone, and I got a digital wallet. And those digital wallets are bank to bank transactions. In fact, WorldPay is saying that by 2030, the numbers are well into the trillions. As a matter of fact, they'll be larger than the 2023 GDP of the entire United States. So, we're seeing this huge trend of this. And I think that's one of the areas that cannabis companies need to prepare for. They need to be in a situation where they can't just say, this has always worked for us.
Yeah, that's true. Yeah, you've got an evolving industry. When you have an evolving industry, you have evolving risks. You're right. They're not the way they were 2 years ago, maybe not even a year ago. They evolve, they change, and understanding the risk associated with that is important. Again, when you're in a fairly mature industry, like let's compare it to mortgage, which is mature compared to cannabis, right? Mm-hmm. But you still have changing. You have dynamics. You still need change management, things like that in place. So, and good practices. So, but one other point I want to bring up to you, Brian, about I think it was a great way you kind of led down from Pueblo to the processor, all the way to TrueLeaf. I think that also, to me, identifies another risk that a lot of cannabis companies probably aren't really focusing on, and that's third-party risk. Is that if you have old saying in risk management, right? You can outsource the function, you can't outsource the risk. You still you still inherently have that risk, and understanding that and making sure that the vendors you're working with have the appropriate controls and processes in place to make sure they can execute the business well on your behalf. Because I can tell you, it'll be coming, if it hasn't really started yet on the regulatory side, is as the use of vendors grow, as the industry grows, so too will third-party risk and a focus on it. So, and that ties directly to compliance.
Jeff, I'm glad you brought that up. That is so critical. We actually saw that with one of our clients, one of our cannabis clients. They actually had a vendor come in, was going to put in a new piece of equipment, and they had to drill through the floor in their factory, in their manufacturing facility. And when they drilled through the floor to bolt in this new piece of equipment, they hit a sewer pipe. And they shut down their operations. And when they looked back for financial remediation from that vendor, the vendor didn't have any insurance. So
yep, there you go.
I mean, part of that third party risk is making sure that they're properly insured.
Exactly.
Right? And I can tell you that a lot of companies, they're not really looking at these things, and they're not tracking those insurance policies. They're not tracking the certifications of those companies, and even in some cases the licensing of those companies, and that will come home to roost. So it wasn't you didn't start the problem, but it's your problem now.
But you own it, yeah. And go ahead, Joy.
I said we didn't start the fire.
Yeah, exactly. But you have to put it out, right? And that's where let's talk about putting it out. And that's where this ties back. Because when I think about third-party risk management, I don't think about third-party risk management separate from compliance risk management. I think about third-party management as a process to help manage your compliance risk. If there are companies out there that outsource any function that has a modicum of compliance risk, they're still on the hook. And again, how do you know that, to your point, Brian, how do you know that they're following, the guidelines that they need to, whether it's compliance? Of course, we're focused on compliance here, but there's also the operational risk aspect. And there are other natures of the other types of risk out there that need to be managed. So you have to be incredibly aware of when you're outsourcing those, and you have the ability from a technology standpoint to track those.
Well, let me put it. Go ahead.
We had another question come in that I just want to make sure we get to, just because I think it's an important one. Jeff, as you're talking about this and talking about the classifications of risk, the definitions of the types, all of that, you have an advantage where you've developed this in a traditional business environment, right? Whereas cannabis has a very unique dynamic, right? Where there's kind of a blend of people who have been in it. Melissa Dowling from the audience wrote in and just asked, as the industry is dominated by non-corporate types, which I think we could even think maybe a little broader, non-corporate thinking, perhaps non-traditional thinking.
Yeah.
What is your view on the industry maybe welcoming in not just corporate folks, but corporate process, corporate procedure, ERPs, some of these things? I'm interested to know your thoughts.
You want me to go ahead and start?
Yeah, please.
Yeah, no, absolutely. So well, again, being a corporate, not part of the industry, I do think that there's, anytime you have an evolution of any industry, I think you're going to see this, right? You're going to have more, you're going to have a demand for more folks that have a certain level of expertise that people in the industry may not have, right? They don't have the experience to do that. And getting back to your original point, Brian, why I think about Newbold, I think about what we've done in the past for financial services, technology, or mortgage and banking. What we have done, most of what we have done and what we can do for cannabis, it's very transferable. Again, when you think about this, let's talk about compliance. The nuances are very, very different, obviously, between, say, mortgage, banking, and cannabis, obviously. But the discipline, the general framework, the approach is the same thing, right? Have you identified all your risks? Do you have appropriate controls in place? How are you monitoring those? And how are you addressing, from a remediation standpoint to make sure they don't happen again? That's not unique to mortgage or financial services. That's the way it is. And that's where having more corporate types, if you will, come in and provide that level, of expertise and experience, really, I think is huge and can really benefit the cannabis industry. When I was at MJ Biz, Brian, I spoke to a number of folks, and they talked about that, and that's honestly what I'm very impressed since I've been in the cannabis industry. I'm very impressed with really how welcoming they are. They realize there's a need for this, and everybody wants this industry to succeed. It's not about me or him. It's again a little bit different, and honestly, for me, Brian, very refreshing from working in banking and mortgage. It's really more of an open attitude. I really find that. I know you still have the roots versus suits, and that'll probably still all go on, right? I mean, again, some of that you can't diversify away, but I really did find that there is they welcome that expert because it just helps the industry overall. So.
Well, look, it's at the end of the day, it's about results, and your firm, I've seen create incredible results for organizations that you've come in and done sort of those assessments, then worked in digital transformation around and putting in place a framework, a technology and operational framework that has, quite frankly, saved these companies and saved them tons of money. And I think that the reason that Qredible is really working with you is because we know you have that expertise. We've seen it in action. We've seen in a very, very complex industry. So we're thrilled you're here. We're thrilled to be working with you. And why don't you let the folks know how they can get in touch with you and Newbold and get going on an assessment?
Absolutely. So if you want to take a look at our website and learn a little bit more about our company and what we've done in the industries we serve, but more importantly, the types of services we provide, which we've covered a lot of that today, but not everything. It's Newbold Advisors, NEWBOLD ADVISORS.com. Hopefully I spelled that right. If I didn't, then just Google it. You can figure it out. And I can be reached directly at jwise, WISE, at newboldadvisors.com. So please reach out. I'd love to talk to anyone that would love to talk more about this. Brian, I feel like I could stay on here and talk about compliance and risk management for another hour. Yeah, I'm kind of geeky like that, but I actually really do have a passion for it. So,
well, you're good at it. So, and I could do the same thing. And this could go on for a couple of hours because there's a lot to talk about. And we had a great 30-minute session, and I appreciate it. Jeff, thanks for joining us, and thanks to all of our friends at Newbold Advisors. Make sure you check them out. And we have a off week next week.
Actually, we don't, and that is my mistake.
Oh.
But we have Pierre Killeen coming in next week from CSAC, which is the Canada Standards.
Oh, that's right. I'm excited about.
Nice.
I'm
Yes,
excited
yes,
about
yes.
our friend Pierre. Pierre is a great guy, and he's running the Cannabis Standards Alliance of Canada, doing some very, very important work up there. And we're going to talk about a lot of things, including the fact that Health Canada just issued a report about a lot of the fraudulent numbers that are coming out up there. So we'll talk a lot about that. Pierre is one of my favorite people in the industry. So how can we forget that episode? So that's next Friday, 3:00 Eastern, 12 Pacific. And join us next week for that. And thank you again, Jeff, and our friends at Newbold. It's been great having you on Qredible Live.
Thank you, guys. Have a great day.